The price to earnings multiple for the S&P 500 is up to 28.5. That's an incredibly high multiple on a historic basis. So one of the screens that I like to do on a regular basis to look for companies that are trading for a price to earnings multiple under 10. Is there anything attractive that is trading for that low of a price to earnings multiple? Because at the end of the day, that will give you a lot of downside protection as an investor, especially if the business is solid and that company continues to generate free cash flow long term. And there are 4 companies that I want to highlight that I think fall into that category today. Very, very low price to earnings multiple, very strong cash flow, and very solid businesses behind them. So that's what I'm going to dig into. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. The first company I want to cover is the kind of company that offers a service that you're not going to cut if we do hit some sort of recession or economic hiccup. That is AT&T. AT&T obviously provides broadband and wireless service to tens of millions of people across America. And you can just look at their consistency in their business in this chart. Especially look at the last 2 years, not necessarily a growth company, but AT&T, like a lot of other telecom companies that spent billions of dollars on spectrum and building out a 5G network, is now starting to increase the amount of cash flow coming from the business. The current price to earnings multiple is just 9.7, and that's even with that increasing trajectory of free cash flow. But there is a significant amount of debt on the balance sheet. So keep that in mind. The total enterprise value is about $291 million, according to FinChat. But you can see here that that debt level is starting to come down a little bit, especially as the company divests some of its non-core assets. Remember, it spun off Warner Brothers. So it's become a much more focused company over the last 3 or 4 years. I think that is going to be positive for AT&T long term. We do seem to be in kind of a steady state in the telecom business where these companies aren't quite fighting each other as much for customers anymore. It's now an oligopoly with AT&T, Verizon, and T-Mobile really dominating wireless. And yes, they're going to fight for customers, but they each have to be able to increase their cash flow. That means that their prices are going to likely go up, margins are going to go up long term. And I think this is a much more sticky business trading for a really good value than a lot of investors are giving it credit for. The second company is one that I talk about regularly here on Asymmetric Investing. That's because I think it's a solid cash flow business, buying back stock like crazy. That is General Motors. General Motors is currently trading for 5.8 times trailing earnings and 4.9 times forward earnings. With a market cap of just $53 billion, $10.7 billion in net income is a really strong position for General Motors to be in. And the other thing that investors need to keep in mind is that management has plenty of money to invest in things like electric vehicles, in the cruise business. That's where I think they could ultimately have the most upside. But what they're doing, what they're focusing a lot of their attention on is share buybacks. This is a look at General Motors' free cash flow and the number of shares outstanding as they bought back a significant amount of stock over the last few years, really accelerated that. Just in the last 12 months, in the fourth quarter, they announced a accelerated share repurchase program, bought back nearly 20% of the shares outstanding, just added another $6 billion to that recently. That buyback will start in the third quarter of 2024. So if absolutely nothing else, GM is going to use a bunch of their cash to buy back shares at a price to earnings multiple ranging between 4 and 6. That is just a really, really attractive price to be buying back a stock. And I think GM is a much more stable business than a lot of investors give it credit for. People are still going to be buying trucks and SUVs a decade from now. Those trucks and SUVs are likely still going to be powered by gasoline the way that they are today. The company is making investments in electric vehicles. Seems that they're making a lot of progress on that front. So I think GM is going to be one of the winners in the auto business, has a much more stable business than it did going into the great financial crisis. That's why I think this price to earnings multiple is just too good to pass up for GM. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Number 3 is Boyd Gaming. And the wild thing about the casino industry today is that it's very different than it's been over the past 20 or 30 years. Over the past 20 or 30 years, there was a ton of investment that went into the casino industry, whether you're talking about Las Vegas or whether you're talking about regional casinos. Those projects needed to be built. Tens of billions of dollars was spent building casinos all across the country. Today, there's not a lot of new locations where new casinos can be built. That means that the industry had transitioned to a free cash flow business. And you can see here, revenue has been on the rise for Boyd Gaming in large part because people are spending more money gambling and out doing entertainment things coming out of the pandemic than they were before the pandemic. free cash flow has also increased, now $515.6 million over the past 12 months. With a market cap of just $5.1 billion, Boyd Gaming, I think, is the kind of steady company in the regional casino business that's just going to keep generating cash flow year after year after year. That cash can then be reinvested in the business where there's opportunities to do that, can buy back stock, can pay dividends. But buying a business where you have put most of your investment in the casinos up front, that big outlay of cash has already happened. Now we're in cash generation mode in most of these casino businesses. So Boyd Gaming definitely falls into that category. Price to earnings multiple is 9.6. On a forward basis is just 8.7. The other company that I would give an honorable mention to is MGM Resorts. That's actually the stock that I own, has more exposure to Las Vegas and then also the Asian gaming market with another casino coming online in Japan. But I have more coverage on that on other videos. Wanted to highlight Boyd Gaming here today. The final company that I wanted to highlight is Harley Davidson, trading for a price to earnings multiple of 7.6. On a forward basis, the price to earnings multiple is just 7.8. So analysts think that earnings are going to be pretty consistent. You can see from this chart that revenue has been pretty consistent, falling a little bit over the past decade or so. But the company has been free cash flow positive. It's been a little bit up and down, but I think this is one of these businesses where if you are a fan of Harley Davidson and the kind of bikes that they're going to make, there's not a lot of other brands that you're going to turn to. Now, this may be a business that doesn't have a phenomenal future 10, 20, 30 years from now, but you're paying a price to earnings multiple that's low enough that the company can just continue cash flowing the business for the foreseeable future. And I think that's the attractive point with Harley Davidson. That's actually why it's trading for the relatively low multiple that it is right now. And what is management going to do with the cash that it generates? Well, here's a look at the company's shares outstanding, the average diluted shares outstanding. You can see that that is down 4.5% on a compound annual basis over the past decade. So certainly look for this to continue as Harley Davidson continues to generate cash. They have now spun off that Livewire business. They still own a majority stake, but it seems like the company is not going to necessarily focus on building next generation electric motorcycles. It's going to focus on its core business. And I think that's absolutely the right thing to do. Continue to be a cash flow machine. And at this price to earnings multiple, that's pretty attractive for investors. So stocks covered here today are AT&T, General Motors, Boyd Gaming, and Harley Davidson. Which one of those stocks trading for a price to earnings multiple under 10 do you like the best? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.